Can you hear my voice clearly? If the voice is clear now, so that we can start the session. Okay. So apologies again for joining the session late. Because of some technical reasons, I will not be able to join the class on time. So welcome to all of you. My name is Hamad Sarwar and I'm the facilitator of this session, the class session. I'm an ACCA member having teaching experience for more than 10 years of this paper. I really wanted to thank ACCA for providing me this opportunity and this platform to interact with the international students and students from different cities of Pakistan. So before starting the session, I wanted to know your feedback about what are the topics that you find difficult in this paper FR? What are the areas that we should focus? Can you mention the name of the topics that you wanted me to cover in the session? Because I have my plan. I want you to give me some of the basic list of contents so that we can match syllabus overall basis. So is there any topic that you wish that I should cover in the session in more detail? EPS, IFRS 15, ratio analysis, leases, consolidation. So the list is huge. Consolidation, cash flow, difference. Okay. So I will try to cover almost the overall course in this session. The result of this paper FR for the last session, that is September 2020, is 50%. That means that 50% students appear in the examination, has passed the exams successfully, and there are 50% students who got failed. So the mostly students ask me why the students got failed in this paper. So there are some do's and don'ts that you should have to focus on. I will tell you the basic lecture plan and the plan that you should have to follow till the exam date. And I can give you a reasonable assurance that every one of you will pass the paper in first attempt if you follow all my instructions. So the passing this paper, financial reporting, is quite easy and simple if you know the pattern of study, and you should have a proper solid plan for the study. Mostly the students got failed in this paper who lacks the basic concepts of financial reporting, who don't know the presentation of the financial statements, and who lacks the analytical skills of commenting on the ratios and, in fact, single and the consolidated financial statements. And one of the reasons for the failure of the students is they lack the computer literacy. That is one of the reasons. So in day 1 and day 2, sharing with you my plan. Let's move on towards the next slide. This is the format of the exam paper. It has three sections, section A, B, and C. Section A has got 15 objective type questions, the total marks of 30. Section B is having 30 marks also, and you will get 3 OTQs, case study questions. And section C will be based on the constructive response, 2 questions of 20 marks each. Section A and section B is the most important part because the most of the paper will be based on this section. It carries 60% of the paper, and constructive response area is only score 40%. So if you score good marks in section A and B, you will definitely pass the exam in the first step. So mostly students who got failed have got a poor performance in section A and B, because in a constructive response question, if you say that I got like 50% marks, like for 20 out of 40 marks, then you have to score 30 marks in section A and B to pass the paper. And section A and B is totally an MCQ style exam in which you can score even 100% marks. So that's the key point. But the risk attached with this section A and B is that when you can got 0% marks. Because in the MCQ you will get 100% marks or you will get 2 marks. So you have to be very careful when attempting section A and B. Section C will be constructive response area, in which examiner usually asks questions from the consolidation topic. The second one, the favorite area, is the final account, and the most favorite area of the examiner is the ratio analysis. So the mostly people lacks how to interpret the financial statements. The interpretation skills is one of the weakness of the students, and which will be discussed in almost all the examiners report by the examiner. Now, this particular slide will tell you about the passing ratio. The passing ratio of this paper is on average basis where it's 50%. So the maximum percentage is 50% and the minimum percentage is 39%. So it will move usually in the range of 40 to 50%, which is again a good passing percentage as compared to other skill level papers. This paper is very important when you are starting financial reporting, advanced financial reporting, that is SBR, and this paper is connected with the audit and assurance paper, AA and AAA. It will help you in AA paper, AAA paper, SBL and SBR. So this paper is one of the fundamental key paper of ACCA. Now this is the day-wise planner of our ACCA practice pass session. In day 1 and day 2, we will be focusing on section A and B. Day 3, we will be focusing on the final account, CRQ with analysis. One of the major weakness of the student is they usually do practice Now this is the section day-wise planner for practice to pass session. Section A and B is the most important area. That's why we are focusing 2 days here. In day 3, we'll be focusing on the final account and CRQ. Usually students do practice on the final account and consolidation analysis on either on Word or Excel, or usually the students do the practice on the notebook. So this is very important that you should have to focus while you practice. At least in these days, you should have to use constructive response workspace of ACCA. So there are a few students, I think they are complaining about the voice is not clear. Sure. So can you give me just 1 minute to switch my internet connection? So welcome back. I hope this time the voice will be clear. I think there are some issues related to the internet. Is that clear now? So these are the topics that we will be going to cover in section A and B. The first one is related to property, plant and equipment, intangible assets, impairment of assets, taxation, financial instruments, government grant, borrowing cost, IS 10, even 6,000 after the reporting date. Then provisional IS 37, foreign currency, inventories, consolidation, IFRS 16, IFRS 15, framework, EPS, investment property, biological assets, and financial instruments. And finally, we have non-current assets and forces. These are the topics that usually examiner ask in section A and B. IP stands for investment property and BA is in fact biological assets. That is the scope of IS 41. Going towards the next slide. Now we are going to start from the topic IFRS 16. So if you have any question about this webinar, you can ask it immediately. Or secondly, if you can hear me clearly, my voice is clear so that we can start the session. From where to prepare section A and B, any suggestions? I'm just suggesting you just focus on my webinar. By the end of this webinar, you will be expert in section A and B. Okay. Okay. So we are going to start with the topic IFRS 16, that is leases. In this lease area, we only have one lease type of lease accounting, that is now the concept is right to use model by IFRS 16. Previously under IAS 17, which was obsoleted now. We have two models. For the first one is the operating lease, and the second one is the finance lease. Now we have only one model, that is right to use asset. So whenever the company acquires the asset on lease terms, you have to book the right to use the asset and corresponding liability. But if the company is paying some initial down payment or initial deposit, then it should be recorded in the cash. So the accounting entry will be right to use the asset debit, cash credit, and lease obligation credit. And then finally, liability should have to be amortized, and the liability at the end should be broken down into current and non-current. Let's start with an example. Whenever the company purchases an asset, suppose the company has purchased an asset, the accounting entry should be asset debit, lease obligation credit, and cash credit if the company has paid some initial deposit. Lease obligation should be credited with the present value of future cash flows associated with the lease. And asset should be debited with the combined amount of lease obligation and cash. Right? If the present value of the future cash flows is 10,000, 1 lakh, and initial deposit is 10,000, then asset should be debited with the amount of 1,10,000. Now, in the future, this asset should be depreciated. Depreciation should be charged on this asset. Now, how we calculate the depreciation of this asset? IFRS 16 says that when you are charging the depreciation on the lease asset, then it should be depreciated at the lower of lease period at useful life. Asset should be depreciated at the lower of lease period and useful life. But if in the lease it is clearly mentioned that the legal ownership of the asset will be transferred to the lessee at the end of the lease period, then asset should be depreciated at its useful life. Okay. Do you people have any issue in this area? UL means useful life. Is that clear? Now, this lease obligation should be amortized. And the liability should be amortized in this manner, like year one, obligation at start, then we have to charge interest, then payments, and finally the obligation at end. Suppose we have got the obligation at the start, which is 100,000, that is the present value of the future cash flows, and interest is charging, assuming we are taking a random interest rate of 0.8%, interest is charging at 8%, and assuming there is a payment of 20,000, that has to be. So the obligation at end will be obligation start plus interest minus payments. This will be called obligation. So this obligation at end should be broken down into current liability and non-current liability. In all these questions, you have to see whether the interest is charged, whether the payment is made on advance or the payment is made on arrears. Suppose if the company is making the payment in advance, then initial amount is 100,000. Then you have to deduct the payment first, and then interest will be charged. It will be an obligation at end. So first we have to make the payments, and the interest will be charged on this amount minus this amount. So first you have to make the payment, and then you can charge the interest rate, that is 0.08. So there are two types of cases. This situation is called the payment in advance, and this one is called the payment in arrears. So when the company is going to make the payment in advance, then you have to deduct the payment first from the obligation at start. Then interest will be charged on the remaining amount, on 80,000, and the obligation at end will be 86,400. But if the company is making the payment in arrears, then first the company should have to charge interest on the obligation, that is 8,000, and the payment will be made, which is 20,000, and the obligation then will be 18,000. Now this obligation should be broken down into current and non-current liability. Now for advance payment, the case is very simple. You only have to report the installment amount in the current liability, and the remaining amount will be your non-current liability. Again, I'm telling you how I have broken down the current and non-current liability. First, you have to think about it whether the case is it for the advance or arrears. If there is an advance case, then the installment will be your current liability, and the remaining amount will be the non-current liability. Similarly, in this situation, you have to make the amortization table for at least one more year. The case is for arrears. Obligation start will be this amount. Interest will be charged 8%. Interest will be charged. Payment will be the same amount. And you will get the obligation at. All you need to do is to drag the 7. So actually 7.5, this amount is your non-current liability. And the remaining amount that have been paid between the 2 years will be the current liability. Now, if you have any question, please do ask. In advance case, the current liability is the installment amount, and the remaining amount will be the non-current liability. So out of 86,400, if the current liability is installment amount, which is 20,000, then the remaining balancing figure will be the non-current liability, and this is 66,400. 70,400 will be broken down into current and non-current liability only when we are preparing the balance sheet for the second year. Right now we are making the balance sheet for the first year. So what we have done that we have calculated the amount for the second year. The amount which is payable in the next 12 months will be considered as the current liability, and the amount which is payable after the 12 months will be considered a non-current liability. So from this point of view, from this date, 88,000, we are here right now at the end of the first year. So the amount which is still payable at the end of the second year will be a non-current liability. And the balancing amount, we are actually breaking 88,000. The balancing amount between 88,000 and your non-current liability will be your current liability. So whatever we have paid between the 2 years, 88,000 and 75,040 will be your current liability, and the amount which is still outstanding at the end of the second year is your non-current. I hope I have cleared the issue. If the question states immediate deposit, it is deducted from the lease amount and the balance is taken as initial lease liability. Why? If you have been given the value of the asset, suppose we are purchasing an asset with a value of 6 lakh and the initial deposit is 1 lakh that we are paying right now is 1 lakh amount, and 500,000 with your lease liability. Yes. In areas not current liability or non-current liability, I have calculated for the year 1 only. Interest in advance case should be calculated after deducting the first payment, and then the outstanding amount will be used to calculate the interest. If the question does not require certain areas, so now the question will never require you to do the second year. Actually, it's you that you have to do the second year in order to calculate the current non-current. So whenever the examiner asks you to do the lease accounting for the first year, all you need to do is to do one more year in order to calculate the current and non-current. Okay. So now here we are moving towards the exam type question. Here you have a question for you. I want all of you to attempt this question and calculate the current and non-current liability at the end of year one. Calculate the current and non-current liability at the end of year one. All of you are required to please solve this question shown on the screen. You are required to calculate current and non-current liability. Yes, we need to calculate the second year in order to deal with the arrears case of the lease. Yes, direct cost should be capitalized in the cost of the asset. Can you address my question? The first year there should be no rental. Why? There should be no rental in the first year. Yes, we have received one of the answer from the students. The current liability is 215,000, and the non-current liability will be, what will be the non-current liability? 911? No. What should be the non-current liability? Yes, 373,500 will be the non-current liability. Very good. 373 will be the non-current liability. 373,500. Yes, very right. So, do you people want me to solve the question? No? Yes. No. Now, starting with the double entry, company has purchased an asset to record the right to use the asset, debit, and as there is no initial deposit, then the whole amount will be recorded in the lease obligation. So the total lease payment that we have to pay in present value terms will be 7,50,000. The lease obligation will be credit and asset will be debit by 7,50,000. Now this lease should be amortized. We are copying the table from here. Okay. So what is the total obligation at start? The total obligation at start is 7,50,000. Then First, we have to make payment, which is in advance. It is 2,15,000. So this is the payment that we should have to make. Then interest will be charged after deducting 215,000 from the total obligation amount, and the interest rate will be 10%. It should be 10%. 0.10. The obligation at end will be 588,500. The current liability should be the installment amount, which is 215,000. So the difference between the total obligation at end and the current liability will be the non-current liability. So this interest should be charged in the income statement under finance cost. On the face of the balance sheet, we'll be having current and non-current liability. Is it clear to all of you? Non-current liability is just a difference. It's just a difference. He's asking us 2000 year end. Yes, it has started actually in April 2007. The financial year starts from 1st April 2007 and it ends on 31st March 2008. LP, there is no LP here. It's lease obligation. Two one five four three five. How you have calculated the amount 215,435? Okay, there are questions. There are people who are confused about the military acquisition. Don't you worry about the military acquisition. It's not, examiner is not going to ask you a question related to the military acquisition. No, later you are making a mistake. You are calculating the amount for 2009. So actually, we are working on 2008. Please explain the breakup. Okay, I'm repeating the breakup here again. Obligation at start minus payment first and interest, and 588,500 is my total liability. That is my total liability. And out of this total amount, the installment amount will always be considered as a liability in advance cases. So whatever the balancing figure we have will be the non-current liability. Now what about the asset? How we calculate the depreciation for this asset? You can see here in the question that the useful life is 4 years. The lease period is 4 years, and the useful life is also 4 years. So depreciation should be calculated on the at the lower of lease period and useful life. Here we have 4 in both the cases. So depreciation will be calculated as 75,000 divided by 4 years. So the depreciation should be 187,500 in the income statement. If you prepare the format for the income statement, the finance cost will be this amount for the first year, and on the face of the balance sheet, asset will be reported at the total amount of the asset is 7,50,000 minus this depreciation. It will be 562,500. I hope I have cleared the doubts. Okay. Do you people wanting to ask anything from this question? LP means lease period. LP means lease period and useful life, whichever is lower. Then asset should be depreciated and the lower of lease period and useful life. Please repeat the value of asset value in the balance sheet. In the balance sheet, asset will be reported at its initial cost minus accumulated depreciation. The depreciation that we have charged in the first year is 187,500. So the amount okay. I'm repeating the depreciation again. We have been given a lease period of, you can see here, this question we have been given a lease period of 4 years, and the useful life is also 4 years. The depreciation rule for IFRS 16 is the asset should be depreciated at the lower of useful life and lease period. But if the question says that the legal ownership of the asset will be transferred to the lessee at the end of the lease period, then asset should be depreciated at its useful life. Okay. Again, I'm giving you another question to solve. Now this is your test your understanding. All of you are required to calculate this question and tell me the depreciation and the finance cost that should have to be charged in the income statement. The first requirement is to identify the depreciation and the finance cost. And the second requirement is to calculate the current and non-current liability. Do remember this point from the exam point of view. Examiner will only going to ask you about the first year of the lease. Okay, do start working on it. I'm giving you just 2 minutes to solve. Now, what will be the depreciation and the finance cost? The first requirement is to calculate the depreciation and the finance cost. The second requirement is to calculate the current and non-current liability. The depreciation will be 11517. Very good. One 517 is the depreciation. The finance cost should be 1578. 1578. Very good. Very good. The current liability amount should be 8843. The current liability is 8843, and the non-current liability will be 14287. 14287. So do you people want me to solve, or it's clear? Do you people want me to solve? Okay. On students' request, I'm going to solve this question. Now, first we have to record the debit and the credit entry. These obligations should be credited with the present value of the lease payment, which is 31,552. Initial direct cost will be 3,000. An asset will be debited the amount by adding these two figures. So first we are going to calculate the depreciation for this asset. Cost of the asset is 34552. The useful life and the lease period is 4 years. It should be divided by 3. So we got the value of depreciation. Now what about the finance cost? Year 1, obligation at start. Obligation at start should be 31552 plus interest will be charged at the rate of 5%. Payment is given to us. It's 10,000. obligation at end should be this amount plus interest minus payments. That is 231. If we do the round off of these values, it will be 11517. So this amount should be reported as a finance cost. What about the current and non-current liability? So for the second year, we have to so 14287. This amount is my non-current liability. And whatever we have paid between these 2 years will be my current liability. So current liability should be calculated by taking the difference between these two figures. So 8844 is my current liability, and the non-current liability should be the total outstanding amount at the end of year 2. I hope I have cleared the doubts related to the lease. Now, if you have any area you wanted to discuss, you can ask it immediately. Now, this is my number I'm sending to all of you. If you wanted to ask anything, you can ask on the WhatsApp group. Secondly, I will make a WhatsApp group tonight, and I will add you all of you. So those who wanted to join this group can contact me, but just send me a message on the WhatsApp. I have shared my number with all of you. You can send me this message on the WhatsApp. I will add you on the group. I have a confusion in the current liability calculated in advanced case. The current liability in advanced case will be installment amount. Serial number with the country code. Okay. I'm sharing you again my number, the country code. Double 092 32221. That is my number. I'm just typing on the Excel sheet. think it's visible now. Now moving towards the next question. Now here we have an exam question for you. This is the question which has been asked in the most recent past paper. So I want all of you to just solve the question and reply your answer with A, B, C, or D. Okay, I want all of you to please solve it. And the requirement is, what is the total amount that should be reported in a profit or loss? Whenever the examiner says that the total amount that should be reported in a profit or loss, that means that examiner wants you to tell them about the depreciation and the total finance cost. So you have to add the depreciation and the finance cost both. Very good. So the right answer for this question will be B. Now this is the question that the examiner has specifically mentioned in the examiner's report, that mostly the students are facing problem in this question. So the most of the students have not attempted this question in the last session. The examiner has specifically mentioned this question, that is one of the assumed to be one of the most difficult questions in the examination of the previous session. So if you calculate the right amount, that is, the answer is D, that means that you are now expert in legals, according to examiner's point of view. So congratulations that you people have done expert level in legals. So D is the right answer actually. So do you people want me to solve the question? Do you people want me to solve the question or solve it, please? I only just need one yes. So, uh, so this question is actually related to the payment installments paid in arrears, and the present value of the minimum lease payment is 106.50, and the useful life is 10 years, and the lease period is also off screen. Okay. The present value of the minimum both lease term and the useful life is both 10 years. So the situation is very simple now. Asset, debit asset, there is no need to write the accounting entry in the exam question. I'm just telling you to facilitate you guys. But from the exam point of view, you do not need to write the double entry in the examination. 106.50 asset debit and 106.50 asset liability. So obligation, year one, obligation at start should be this amount. Interest will be charged at the rate of the interest is 8%, 0.08. Payment will be made at 15,000. And obligation at end will be this amount plus interest on this. For the depreciation, it will be calculated at it should be calculated at this amount divided by the 10. So the amount that you should have to charge in the income statement should be the question says that it will start from 1st April to 31st December. So we have to make first you have to make the proportionate amount for 9 months. 9 divided by 12. Similarly, the depreciation will also be calculated by multiplying the whole answer 9 by 12. So actually the total amount should be this amount plus this amount. So this is how we have to calculate. So 13587.8 means 13588. So is that clear? Well done, guys. Well done. So I'm giving you again another challenging exam question, which the examiner says that mostly students will not be able to answer this question. So here is a challenge for you. The question is same. What is the total charge of statement of profit and loss for the year ended 30th June 2005 in respect of the right to use the asset? So I'm giving you just 1 minute to solve it. It is not an advanced case, it is a payment made in arrears case actually. So there are few students who have calculated the answer B, but I have not yet disclosed the answer. I'm giving you 2 minutes to solve the question. The student who will give the right answer will get the Mercedes car from my side. So if you want the Mercedes car, let's Mercedes car. You have to give the right answer. So I'm going to disclose the answer. So actually the right answer is the right answer is the right answer is the right answer is B. The right answer is B. So those who have calculated the answer correctly, I think they are now expert in leases. They can attempt any question at the S7 stage. So the situation is tough now because I have to distribute a lot of Mercedes because lots of people have given the right answer. If the sale and lease were part of a syllabus, yes, it's definitely. So B is the right answer. So do you people want me to solve that question or it's going fine? Okay. I just got one yes. It's in fact more than enough for me. So first we have to analyze whether this question is advanced case or arrears case. The question clearly says that it is an arrears case. but it involves a directly attributable cost of 37,500. So actually the present value is 46,57500. Asset will be credited with the amount of cash, that is 37,500. Asset should be capitalized by adding these two figures. Okay. So when we are calculating the depreciation, we have to take 8 years life. Yes, it is 8 years life. Do we need to proportionate the amount? No, we don't need to proportionate the amount. The obligation at start will be this amount. Interest will be charged at 6% without any proportionation. And the payment is question is 7,50,000. That will be my obligation at the end. So the total amount that should have to be reported in the statement should be 586,875 plus the interest amount, which is 279,450. I hope we have done it successfully. So if you have any question, you can ask it. How do we know it's 8 years? It's mentioned in the question in the first line. The coordinate company entered into an 8 years lease agreement. It's mentioned in the first line. Okay. Do you people want me to ask anything regarding right use? Any question? Trust me, believe me, that if you have attempted these two questions correctly, means that you are up to the mark according to the examiner's standard. Because these two questions that we have done recently are one of the most toughest question according to the examiner, and it's mentioned in the examiner's report actually. Examiner has given example to the students that this is the question that usually students will not be able to ask it to write the answers correctly. Okay. So congratulations. We are going to work on the second topic. Now here we have a situation with the name sale and leaseback. So in sale and leaseback, we have two situations. The first one is the transfer is a sale, and the second one is transfer is not a sale. So we have two situations. The first one is the transfer is a sale. The second situation is transfer is not a sale. Talking about the transfer is not a sale, that means that we have sold the asset and lease it back over the useful life of the asset. So if the lease period and the useful life is more or less same, and it means the sale, the transfer is not a sale. Then you continue to recognize the asset at its carrying amount, and the whatever amount that you have received should be recognized as a liability. In the second situation, transfer is a sale. You can recognize by comparing the transfer is a sale situation by comparing the lease period and the useful life. Suppose if the lease period is 2 years, but the useful life of the asset is 10 years. So that means that we have sold the asset to someone. So in this situation, we have to de-recognize the asset, then subsequently recognize the right to use the asset, proportionate basis, and recognize the liability and the profit or loss of disposal. Okay. So this is the situation. So actually, I have to cover IFRS 16, IFRS 15, IFRS 9, and IS 20. I have to cover at least 4 to 6 standards today, but because of some internet issues and some technical issues, I will not be able to cover the syllabus today. But we will compensate these hours in the next class. So our next class will start at 8:30 sharp. So don't you have to worry about timings which we have lost today. So I will compensate you, but do remember this, that I will make sure that you will be expert in the IFRS. You will be the expert in each and every IFRS as far as section A and B is concerned if you follow all my webinars. So should I move forward? Not see people are fine. Should I move further? What time the next class will start? The next class will start tomorrow at 8:30. Okay. So we are going to attempt the example of the sale and leaseback situation. Okay. So can you tell me the accounting entry that we made when we sold a non-current asset at a profit? What will be the accounting entry that we made when we sold a non-current asset at a profit? What was the accounting entry that we made when we sold a non-current asset at a profit? I'm giving you the example of sale and leaseback actually. First, I wanted to check your accounting entry. I'm asking it again, what will be the accounting entry that we should have to made when we sold a non-current asset at a profit? No answers received yet. Cash to bank? No. It's not good to see the people are not giving the right answers. It's a basic fundamental question that if the company has sold a non-current asset at a profit, then Can you hear me? Hello. Can you hear my voice? I'm not receiving the feedback from the students. Can you hear my voice? Hello. Hello. Please write yes in the chat box if you can hear my voice. Please write yes in the chat box if you can hear me. If you can hear me, please write yes in the chat box so that we can start treatment of sale and lease back. So, can you hear me? I'm not getting any message from the students. I'm not receiving the message. I think I should start. Okay. So if the company sold the non-current asset at a profit, then the accounting entry will be then debit, non-current asset credit at its carrying amount, and there will be a credit entry in the name gain on disposal in the income statement. This will be the fee. Okay. So this will be the take home fee. If the sale and the leaseback constitutes a sale, let's say the transfer is a sale, then you can recognize this gain. But if the question says the transfer is not a sale, transfer is not a sale, then accounting entry will be debit, bank, credit accounting entry will be made in the loan. So standard says that if in case of the sale and lease back, there is a transfer and which ultimately becomes a sale, then you can recognize a gain. And if the transfer is not a sale, then you cannot recognize a gain. You can only record by debiting the bank account and crediting the loan account. Is that clear? Whoever wanted to join the WhatsApp group should have to send me the message directly on my number. Okay. Then finally, how we can identify the transfer is a sale and the transfer is not a sale. Now you are required to give me the answer. If I sold the asset and lease it back on the period of 2 years, whereas the useful life of this asset is 10 years. Now in this situation, do you think that the transfer is a sale or transfer is not a sale? Do you think the transfer is a sale? Or the transfer is not a sale? We have sold the asset and leased it back over a period of 2 years, whereas the useful life of the asset is 10 years. So the transfer is a sale or transfer is not a sale. Do you think that do we still control this asset or we have lost the control of most of the asset? Do we still have the control of the asset over its useful life or we have lost the control? Because the lease period is only 2 years, but in a similar sort of situation, if the lease period is also 10 years, then this means that the transfer is not a sale because the control is still here. This is called control maintained. So this situation is telling us that the transfer is not sale. Then we cannot derecognize the asset. All you need to do is to record the whole amount that you have received in the loan account. But if the transfer constitutes a sale, then you have to derecognize the asset first, debit in the bank, and the balance will be recognized again in the income statement. So you have to recognize again in the income statement. Okay. And then when we lease it back, accounting entry should be debit, right, to use the asset, credit, these operations. So when we make the combined entry of these two transactions, so what will be the treatment? What will be the combined entry for this transaction? So the combined entry should be Debit bank, debit, right to use the asset, credit, asset that we have sold, credit lease obligation, credit gain. I've not done nothing new, just I have amalgamated these two transactions. The first one is for the sale, the second one is for the lease it back. So when I have amalgamated these two transactions, the combined entity will be debit bank, debit right to use the asset, credit lease obligation, credit gain. But if the transaction has transferred the control, does not transfer the sale, then that means then the whole amount that you have received should be recorded in the loan. So whenever you book the loan account, you have to book a finance cost of this loan. So this loan will be amortized in a similar fashion and pattern that we have used for the amortized cost method. Then the similar lease arrangements, but the treatment is a little bit different. I hope I have delivered the concept. No interest. Okay, still. Okay. I think we are already running short of time. There are a few students who are not been able to see the screen. Not able to view the screen. So I think my internet is also having some problems today. So I think we should resume our class from tomorrow, and I think we should discontinue, stop the session here. But lots of problems are arising here today from the start till the end. So don't you worry about this concept. We will discuss this concept tomorrow again. So because of some technical issues, I am just closing my session here because of some internet and different issues. I think whatever I have delivered to you guys, I think you got the point. And sale and lease back is one of the topic that we will discuss it tomorrow. Tomorrow will be 8:30 p.m. Yeah, we will discuss the last concept tomorrow. So don't you have to worry about this sale and lease back arrangement. Focus on the sales, on the lease arrangements in advance and in areas case. Try to attempt past paper questions and exam kit questions from the final account area and section A and B. So we will review this topic for tomorrow. Tomorrow the timing will be 8:30. 8:30 p.m. tomorrow. So tomorrow's timing will be 8:30 p.m. till 11 p.m. So today more than 1 hour has lost due to the technical issues and some internet issues. So tomorrow we will be extending our session from 11 to 12 or 12:30 p.m. or AM. So your connection should be resolved tomorrow by tomorrow. Yeah, the class is finished now. So take very good care of yourself. So see you guys tomorrow. Bye bye. Take care. Allah Hafiz. Tomorrow 8:30 till 11:30.